Let's bring on board the management of Samvardhana Motherson. We have Mr. Pankaj Mital, who is the Chief Operating Officer of SAMIL, as well as Mr. Kunal Malani, who is the CFO at SAMIL. Very good afternoon to both of you gentlemen. Thank you so much for joining us on ET Now. And also, if let's talk more about SAMIL's number in the quarter gone by. And if you look at your numbers, actually good growth across when you see on a year-on-year basis. But when you actually see the margins, they've actually been stuck in the range of around 8 to 9%. And at least this has been the trend for the last 5 quarters, be it the auto ancillary industries. We've actually seen companies' margins increase. If you could tell us what's actually keeping SAMIL growing that margin figure?
Look, I think, first of all, please do appreciate this is seasonally the quarter where there are summer shutdowns in Europe. So traditionally, the volumes are lower. It is also the period where there were volatilities on account of supply chain with one of the customers in Europe. And there were strikes in UAW, which also impacted volumes. So to that extent, there was impact that had on the top line and correspondingly on the bottom line. We, however, have to keep our costs the way it is, and hence these short-term volatilities we cannot manage in that regard. Also, this quarter we got 4 new acquisitions. Again, August is the summer shutdown period, so you're only seeing effectively 2 months of performance, and that also in a seasonally weak quarter as it is in Q2. So the way I see it is on a year-on-year basis, we have grown quite substantially. The EBITDA, absolute EBITDA has grown to 34%. Revenues is 28%, and PAT on a normalized basis is nearly 40%. So in our view, it's been a fairly decent quarter given just the volatilities all around us. On the percentage margin, as we have often said again and again, please track us on absolute margins and not percentage. We are an ROC-focused company. We're not a percentage margin-focused company. And hence our endeavor has been to improve our ROC, and given the growth that you're seeing on year-on-year basis, our ROCs have also grown correspondingly. So hence I think it's a fairly reasonably good quarter.
Right. Mr. Mittal, also what is trending right now is whether you look at premiumization, the EV trend, that's been driving the growth in the industry. What are the growth levers that the company sees and they have identified from the cells? And, being one of the biggest players and largest players in the auto ink industries, what do you think will lead the growth next now?
As a company, we are a powertrain agnostic product manufacturer. Most of our products go into every vehicle, be it a BEV vehicle, be it an ICE vehicle or a hybrid vehicle. So whichever kind of choices the customers would make in the future, our products would remain with them. Secondly, we have been growing geographically as well as into different products. So you see our 3CX10 direction has been very, very helpful for us. Thirdly, wherever the customers require solutions, so our vision for a very long time has been to be a globally preferred sustainable solutions provider. So we have either developed new products, gone into new geographies as an organic greenfield site, or through acquisitions. So all the different ways of providing solutions to the customer have been the direction for growth. And we believe that in the coming years, the growth is only becoming better and better, and we provide more and more solutions. As a group and as a company, when you look at us, we have also invested into new areas of growth, be it aerospace or health vertical, and you would have seen that many of our acquisitions are transformative in these new areas as well.
Right. Let's talk about your capex guidance for the entire year, and it will be very heartening to know that you've actually increased your capex guidance to about 4,500 crore rupees as envisaged earlier of around 3,000 crore rupees or so. If you tell us why such optimism, or why such a faith in actually going ahead and building more capacity as well, if you could tell us where exactly or which areas exactly are you going to go ahead and invest more?
See, as we have mentioned, that more and more facilities are also coming in the emerging markets, which includes India in a very big way, So we had earlier said that we would be setting up 6 new facilities. Now it's revised to 10. Our customers have also announced a lot of growth plans. As you mentioned, in India, all the automakers are our customers, and they are putting in more and more facilities. And we are one of the key partners to them and a trusted partner. So we are also setting up more and more facilities to support them.
Right. Kunal, there are some concerns that are there regarding your debt levels. Now, to fund your capex and to manage the working capital needs, you will be raising some money. So, does that mean, and you have also revised your capex as well. So, how do you see the net debt to EBITDA trending in the second half of FY24 now and beyond that as well?
So, look, I think first of all, this is by design. We announced, 15 acquisitions. We've closed 4 of them in this quarter. The payout of those 4 is, 3,800 odd crores have been paid for these acquisitions. And then we have gone and seen a lot of organic opportunities, as Pankaj was just mentioning, specifically in India. Which is causing the bloating up of the capex as well. So we spent around about 1,300 crores of capex in this quarter on that count. So these growth opportunities in these times is actually showcasing the strength of the business model that we have at one end. At the other end, when you think from the leverage itself, our financial policy was 2.5 times net debt to EBITDA. We are still at 1.9, and even with whatever revised capex guidance that we have given of 4,500 crores, as the new acquisitions will get integrated, as we start synergizing with some of them, typically quarter 3, quarter 4s are much better than quarter 1s, quarter 2. That's how you can see traditionally the business has played out. As the margins expand, I wouldn't say ROC expands. Or absolute values expand, in our view, the leverage ratio will decline from here on. So by March, we think it should be somewhere back to those 1.6 odd levels, give or take, depending how the world markets played out.
All right. On that note, we leave it there, gentlemen. Thank you so much for joining us on ET Now to talk about the quarter gone by for SAMIL and also the areas that you're going to look at investing further. And that was the management of SAMIL talking